Morning, everybody. Happy Tuesday. This is the morning show. Spencer, JC, Steve, and Rick running the charts today. We got Craig Johnson on the show. Dr. Phil will stop by. Kenny Glick will stop by. And I guess we're talking retail. I'm not quite sure, honestly. It's been a good morning for retail so far. What a day yesterday. We'll talk about that. Steve may be pivoting from keep money mode to make money mode. I don't know. We'll talk about it. All right. How are we doing, chat? Good morning to everyone. Yes, excellent. All right, let's do this. You ready? I'm ready.
Oh, Steve Strazza, get money mode?
No.
Spencer's
Is the chief YOLO officer back?
I am precocious today.
Went anywhere, dog.
You're a who? Precocious? What is a precocious? I don't like words that make me feel dumb.
I apologize if I put words in your mouth, Steve.
No, it's okay.
That's what precocious means?
Yeah. There have been 2 up days.
I don't like that.
They're still in control of the tape here. They'll probably show back up today. This is exactly the spot you would expect to see them.
Bears are in control of this bull market?
Bears have been in control for 2 months. That's what we've been saying, right? Actually, a client called me yesterday with a big thanks. We talked for 15 minutes. He wanted to know how I knew to start taking profits and reducing size back in September. I said, market internals, man. It's all about market internals and what the riskiest stocks are doing. But yes, when you hit these
biotechnology stocks not the riskiest stocks, and are they not making new 52-week highs every day?
Dude, it's fine. It's all good. So when you nail the turn, stuff like this, we started raising cash 2 months ago now. Now we're ready to go. It's about finding that moment where stocks are going to kick off a fresh leg higher. Because then you nail some really nice entries, you make money on the long side again. Everybody's happy, kumbaya. JC stops talking about biotechs every day because there's actually other shit to talk about, right?
Like energy stocks and pharma.
Right. But we're close. So basically, I'll tell you, we're going to go through it on the open bar. We're going to go through it live charts in the open bar. But the VWAP levels that we're running up against today in the major averages, if you get a big green candle, yeah, it's go time. They're all set up the same way. We're going to go through those levels live on the open bar.
Listen, guys, I'm just breaking balls this morning. I'm in one of those kind of moods. Steve Strazza having a hell of a year. Absolutely, nailed the spring, nailed the summer, has been right on point these days. We might have different time horizons and we might be approaching this market in different ways, but don't let my ball busting misconstrue what Strazza has been doing. He's been off the charts. And the fact that he has a show now called The Open Bar just makes me so happy. It's the greatest name for a show ever.
Thank you. I offered it to Patrick first and he's like, he didn't think it was super hot. So I said, it's mine.
That was your idea?
Yeah.
Really? I don't know if I believe that.
Name this fucking company. Yeah, it was. I named some great things every now and then.
I don't know.
I don't know about that.
All right. So what happened yesterday? So what is Spencer talking about? Spencer's like, get money mode. What's going on? What happened yesterday? That's so
Well, things went up in price.
Like what normally happens during bull markets?
What hasn't been happening recently. So yeah.
So are you actually saying that tech stocks had a great day? Is that what you're actually saying?
A lot of things.
That's part of it. Yeah.
No, it was a big up day. It was a big broad up day.
Yeah, that's part of what I'm saying. It's not all of what I'm saying, but yeah.
Financials and industrials are more important than tech to me. Those are the
ones. Wow! Whoa!
Tech's fine.
What was that?
Tech is okay. But financials.
So you're saying just right now, not always.
Yeah, like right now. Like
this was like this manifesto coming to Jesus moment.
No, tech could fall a bit more and still be above like key VWAPs, right? So you'd still look at it and say like buyers in control of like the long-term trend. Something like financials or industrials, you could start to question that if these tops complete. You could make a sound argument that actually bears are in control of those longer-term trends. That's not the case with tech. It would have to fall a good deal before we'd say that. I don't want to see primary trend damage. Really, this is what I'm
All right, we got almost 2/3 of stocks on the New York Stock Exchange and uptrends, right? Typical for bull markets. Why don't we do a little state of the markets? And then I want to talk about something important.
Everything's important, I thought.
Yeah.
Okay.
All right, guys, we got the Dow futures this morning doing nothing. 48,500. Excuse me. That's 46,500. We got S&P 500 futures flat, 6720. Nasdaq 100 futures down slightly, down 47 points, 24,900. 30-year bond futures up 0.25%, 117.5. You got crude oil down 1.5% at 58. Copper up 2.5%, 517 for copper. Wowzers. 517 for copper. What a big move. You got gold up over 1% today, 41.78 with silver. Wow, how many times have I said I'm so impressed with silver? I don't think I've said it this many times in my entire life. Silver up another 2%, 52 for silver futures with the VIX still above 20. How is that even possible? Over in funny money land, you got Bitcoin down a stick this morning, 87,180, down 1,000 points on the day after a big ripper yesterday. 2,900 for the ETH, down 1.5% with the old Solana. Solana 136, down almost 2% on the day. That brings the total crypto market cap. Mr. Spencer Israel.
Yep.
2.96 creeps slightly above 3 trillion yesterday before pulling back a little bit, but right near that $3 trillion threshold. How do we feel about this morning's futures?
I don't feel anything about the futures this morning. Things are kind of quiet out there. Mostly I felt excited about yesterday. I mean, a lot of things are going up, which we haven't seen. So yeah,
like what stood out the most is going up.
Well, I mean, every sector was green except Staples and right. Yeah, Staples was the big laggard, but everything else was good. And yes, tech was the best. But we've talked about discretionary and how that's been such a
oil services
mess.
were up. Oil services were up.
Right.
Explorers and producers were up almost a full percent.
Yeah. Of course,
I mean, I would argue most energy stocks were up.
I mean, there's pockets of weakness in the up sectors.
The refiners. The weakness was in the refiners.
Yeah, right. Energy was flat. Energy was flat.
And some of the big ones. Exxon was down. Chevron was flat.
Right.
Yeah.
So yeah, it was nice to see some just a big old green day. It's nice to see it.
So if you could throw up so there was a few things. So I'm actually going to step away in 3 minutes. I got a parent teacher conference today on Zoom.
Is that how they all are?
Parent teacher conference. I used to hate it when I had parent teacher conferences when I was younger. I was like, I don't know if I want my parents knowing.
They don't do those in person?
I guess not in kindergarten in 2025. Throw up here. Throw up the new slide. The new slide two. This one coming from our friend Macro Charts. This one showing the ETF, the short ETF volume, highest ever. So they are stepping into these short funds at the highest rates ever. Can we throw that one up? I thought that was pretty interesting. This one coming from the old Macro Charts. Record high. And look at anything that's even remotely close to this, key bottoms this spring, last August as well. Strazza, what do you think about this? You put sentiment further down the list of importance than I do. I'll give it more weight, I think, historically. So I'm curious to see, does this mean anything at all to you?
I think Todd Sohn would say you tend to get decent signals here. Doesn't he say that? Or it's the longs. It's when the longs blow out. I know Todd uses it. I think he says actually there's not enough short activity to really use it. But yeah, that's something. Look, it's new. A data set like this, you can't, how far can you really go back? That's the problem with something like this. But yeah, that would stand out.
Can you throw up the new slide 5? The new slide 5. So people are just. I mean, I think that makes sense with the VIX doing what it's doing. Like if I didn't show you that chart and I said the VIX did this, you know what the market's done. Do you think there's some action in the short ETFs? You probably would have said yes. Maybe not to the degree that we've seen, but that probably makes sense with what you were thinking anyway, right?
What do you mean?
The fact that the VIX spiked to 30, and then you're getting volume in the short ETFs, right? I mean, that makes sense. right?
I'll tell you, these VIX vehicles, man, I haven't dabbled with them in a long time, and they still just absolutely suck.
Well,
Because
you're
you
a smart
VIX,
man. You're a
oh,
smart man.
God.
If you could throw up side 5 there. I took this screenshot just for memes.
Yeah.
Right. So this is Bitcoin up 1% yesterday, as the folks over at Yahoo Finance are telling you that Bitcoin has 3 big problems, heading for the worst month in 3 years, and some key challenges that are facing the cryptocurrency. I figured I'd just save this for memes. I'm happy to take the other side of these journalists. How about you?
I mean, there is a ridiculously bullish article and a ridiculously bearish article written every day about crypto.
Yeah,
So,
that's probably right.
I want to put. Also, it's funny how every market piece of market data on this screenshot is green. There's 5 pieces of market data and they're all green.
Well, it's the British pound and dollar yen. So I don't know.
And Bitcoin and MicroStrategy.
Bitcoin and MicroStrategy up 5%. So yeah.
Yeah.
And then
look,
this last one.
crypto is setting up for a massive bounce. It's just, when does that come? But you're at least gonna get an oversold bounce, right? You're gonna get an automatic reaction higher at some point. So if you want to time that and trade it, I think you really could at this point, because the drawdown for crypto, where'd you go? The drawdowns in crypto, nasty, man, just really, really bad. So I don't know if you want to go through earnings and stuff. I wanted to save. Well, here, throw up the financial.
I have something. Can we bring up slide 7, Rick, please?
But this will be a good time. I just want to go through and give like a primer on what we'll talk about in about an hour today.
All right. Before we do that, this was courtesy of Eric Balchunas this morning, who's a great follow, and I often wonder, like, who buys this exotic stuff? Who, like, the volume and the flows into these crazy leverage and inverse funds has been quite strong, as evidenced by the fact that we're seeing new ones every single day almost. And I just think to myself, who is buying this? And I seem to have just forgotten that there are other countries out there with cultures of risk taking that we don't really have. So India and especially South Korea, right? Those South Koreans, they like to gamble on the
Asians in general,
right?
They take aggressive risk in markets. Right. It's a part of the culture.
So I saw this and I chuckled, because I often think that we need something like this in the U.S. where you should be required to, like, take a little bit of just a half hour long thing, just to understand how volatility decay works and how daily leverage resets work, and how that you cannot just look at TQQQ
Spencer.
over what?
No, you don't want the government giving a fucking online education course about trading.
No, it's not about trading. It's about how these things are structured, and you cannot just zoom out to a 20-year chart of TQQQ and say, oh, this is the best investment ever. I should just put my money in that. Like, that's not how this works, right?
People who get hurt in the market doing dumb things like this are destined to fail in the market, because they're going to find something else dumb to do.
That's probably true.
You can only save them so much. It's on every individual investor to go and get whatever education or knowledge set that they need to act responsibly in the market, right? And to treat their money responsibly over the long run. If you can't do that for yourself and you need the government to step in and try to force you to do that, you're already so fucked. You're already so fucked. Seriously.
Probably. I thought it was a nice step. Yeah, I'm not saying don't let them buy it. Let them buy it. Let them buy it for all I care. Who am I to tell another person what to do with their money? If they want to do whatever they want to do, then they can do it.
That's the best way to teach them. Let them buy it. Let them buy as much as they want.
Like, I don't know. I've had that conversation about daily resets, I don't know, 500 times over the years, and it gets tiring after a while to explain that stuff. So anyway, I just thought that was fun.
Sharp Forge says that's a Western take, Strazza. That's right. That's right. It is. That's right.
All right. Yeah. What else?
Little.
So there's a lot going on this morning on the earnings front. Big day for a couple of retail stocks that have been beaten.
You know which one I want to talk about?
Abercrombie and Fitch.
Keep looking. Look on.
Is it Kohl's?
Ba.
That's not American retail.
Baba, it's all the retail you need to know about right now.
All the retail you need to know. The conference call has just ended, it appears. The earnings were out this morning. Top line beat, bottom line beat. What did they say about AI?
I'll tell you what they said. They said they cannot keep pace with the growth of customer demand for AI, and that the growth is still accelerating for AI. And you're
good.
getting to see a bid across all of tech China today. They're talking about supply chain issues, which,
And that's bullish now.
what a nice problem to have, right? What a nice problem to have. People want your stuff at such an increasing, demand pace that you can't even keep up with it. Alibaba says it will actively invest in growing its AI capacity. You better, Alibaba. So they're saying all the right things. They're doing all the right things. The numbers are there to back it up. Look out for Baidu to fail this top and rip higher as well. There's been some real relative strength in that stock over the short term. Alibaba says 380 billion yuan investment, previously mentioned, might be on the small side given customer demand. So, they're giving all the right stuff here, it seems like, in this call.
I found personally that Alibaba and its ilk, I found it to be very challenging over the years to trade these things. I have gotten shaken out of these names more times than probably any other group that I've participated in.
We say that these stocks are not for the faint of heart. You have to know the volatility characteristics of them and be ready to wear 30-40% drawdowns along the way. You almost just got one. I mean,
I know, yeah, no kidding.
20%, 22%. However, earlier this year, this thing was down 35%, Alibaba, during the March-April sell-off. Oops, sorry. We bought the calls in Baba and Baidu last week, basically, when the charts weren't showing much in terms of like failing these little tops and moving higher quite yet. But I was worried that the Baba earnings report would set off some reaction rally and then we'd miss it. So that was almost like an insurance purchase just to get ourselves the exposure we want into January. I'm glad we did. Yeah, it's really nice. This is steep corrections to kick off new up legs. It's just what you get out in China.
And you can pretty much see on this chart where a person such as myself would have gotten shaken out 3 or 4 times, right? It's happened. It's happened twice this year already. So,
yeah, you've been stopped out twice, really?
Yeah. Or maybe not. Maybe in the last 12 months, right? I don't know if it was actually this year or late last year, but yeah.
Get back in there, man. Get back in there. Get some Biden too.
Yeah. No, I find it challenging. You know what I mean? It's all good. It's all good.
Yeah, Biden did have a great day yesterday, Harminder, for real. Saw that, liked that a lot. And yeah, I think crypto, look, there's going to be trading opportunities on the long side here. We're not going to sit here and pretend like we didn't just get hit with a nasty corrective wave. Some of these things, man, Rigetti is about 30 to 40% away, 30 to 40% move higher just to get to VWAP resistance. It could still fail and roll over at that point. You get a 30, 40% trade just on a counter trend move. I mean, there's going to be a lot to do setting up soon. I think we'll know a lot more by the close today.
And therein lies the source of the anxiety. No one's freaking out, at least no one that I've seen is freaking out about the S&P 500.
No.
Or even Bitcoin. I think at this point you should know what you're in for. It's the Rigettis of the world. It's the quantums. It's the ones that are in 50, 60% drawdowns, right? Because a lot of people get stuck holding those bags, and yeah, that's kind of their problem, right? But that's where the anxiety is. It's not. No one's freaking out about Nvidia. I mean, maybe Nvidia is, but
and I wonder to that point if it was enough.
Well, as JC would say, they don't matter. So
Nvidia don't matter?
No. Oh, the other ones. No,
right. So I'm saying I wonder if it was enough or if we have to see more at the index level before we can kick off a new leg higher.
Yeah.
I would kind of like another splash lower. Look, I'll talk more about this on the open bar. I shorted financials yesterday. I bought the puts, shorted IWM, loaded up on puts, closed the trades by the end of the day because it was just that kind of session. And these patterns, the way they are right now, and the way the tape has been for the last 2 months, I have very little conviction about the direction they're going to take. I just know they're going to take a direction eventually. And because of the coil setups and the volatility compression, that you will get a big move. So whether XLF fails this top, rips higher and is at new cycle highs in a couple days, and that was a great long opportunity, or if it completes this top, big red candle with some follow through, bang, 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 you're going to have a great trading opportunity to the downside. We just need to see which way these patterns are resolving, and we don't quite know yet.
Okay. We got Kenny in the house. Is that true? We do. Indeed.
Kenny.
Let's bring him out. Bring him out. Bring him out.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 problems, and I still kept it 100. Hold
Kenny, like, what's going on?
I was promised a market crash. I'm waiting for it. What's up? I'm with Sean. Sean promised. Sean, it's coming. It's coming, Sean, if you're listening. What's up?
I appreciate how at least you are nimble enough to change your mind about this sort of thing all the time, because I know you want it. I don't know if we're going to get it.
Well, yesterday was a power gap to basically punch the shorts in the face. That was the most boring, complacent, bullish day we've had in a very long time. And it just made me more bearish. Yesterday pissed me off. But at least I avoided it. So I just sat there and just watched Resident Alien and Pluribus. So if what you've heard, I love it. My wife wasn't into it. So whatever. Good. I got another show to watch without my wife.
So yeah, so not every day can be fireworks and roses, right?
Yeah, boring, terrible. I mean, bullish is boring. Most bull markets are boring. Trading's not supposed to be exciting. But yesterday was an extra layer of boring. But you know what? I could smell it right away by an hour in. I was like, all right, we're just going to hold the Qs long and UVXY short all day. But you know what? NVIDIA had some nice volatility, and our friend OPEN is the greatest stock to trade of the year. I don't need to own it because it rips and dips almost every other day. This is by far the best stock to trade on the market right now. Really is.
If you're trying to hold open for like a few weeks, it's hard. It's hard, you know what I mean? But I guess day to day. You know what I mean to ask you, Kenny? How much do you like? So yesterday was a boring up day, right? How much do you let your mood from the prior day impact your mood when you sit down the next day?
Right? Oh, yesterday I was in such a mood because you know what? Being a bear, I have a purpose, right? I want to be bearish so the market gets hammered, so then I could buy. So when the market gaps and goes, like that's a very elusive trade yesterday. The market opened up strong and just ripped and then basically sat there all day. It kind of sours me because it takes away from what we do. But also what I'm upset about is that I was looking to buy some dips. The quantums hit some areas where I was looking to buy them and they all gapped and went. So I had nothing to do. So again, my mood right now is I'm in a kind of wait and see, like Strazza was saying. Why don't we just wait? If volatility, again, UVXY has been doing its job. So anytime that shows signs of strength, the market gets a little weak. But right now, we're going right back to earnings. We got a whole nice list today. We got Zoom, we got Kohl's, we got Burlington Coats, stocks that we don't normally look at. But, in Alibaba, you guys are talking about it. Not a fan, obviously, and just looking for a short on it. And, around 168, I'll probably give it a shot. But, there's enough to go around today, which will keep me interested. And, of course, you got Open and UVXY and the Qs. And I do think those sellers are going to show up one more time. I don't want to let you guys off the hook yet. So I think we're just going to have one more scary down move. And then you could have your bull market back. Friday was like, wake up. There was a moment on Friday. I'm like, all right, I guess the sell-off's over. As soon as the market consolidated and then broke over VWAP, UVXY starts to collapse. It was like, oh, man, it's over. And then you got the Monday gap. So I just think we're going to have to figure out somewhere in the middle right here.
I think one more just splash lower makes so much sense. Like the index is still not enough to the downside. I'm totally with you. I don't know if that means
really no fear. When that fear hits where like, are we going to come back from this? Let's get that moment because we always come back from it. But that moment is awesome. And I was thinking again, we were right there. If we break that double bottom now, that 580 area on the Qs, I'm always looking at the Qs.
Yeah.
Got about 35 more points to the downside that we can get. And then it'll be a beautiful turn. And, I'm expecting, next year I'm expecting a bear market. The market's only going to be up 12%, which is the new bear market in this environment.
Right.
So
the thing that I appreciate, Kenny, is, as you just said, is you're bearish so that you can buy on the dip.
yeah,
So,
give me some
you're kind of
Tesla.
bullish.
Give me some Tesla back at 3.25. Give me some Palantir back at 120 where I sold it, and I'm bullish again. Just you got to wipe these people out so I can buy cheap. That's what I heard. You're supposed to be able to buy low and sell high. I'm sick of buying high and trying to sell higher. So,
well,
if
isn't
you
that what
see the
happens in
sellers,
bull markets?
if you see sellers come back with force, I think it happens right around the current level, though, because if you drop VWAPs from all-time highs to the cycle highs, and a lot of these indexes after the little reaction rally we had over the past few days, we're right there.
yeah.
We're sitting on them here this morning, so they're going to come out. This would be a very logical level. Let's see how the day goes.
Yeah, and also, we have these conversations about overall market environments. For us, for day traders, you just need one good trade to make a living at this. And, something like, have you guys watched ONDS? This is a 33-cent stock, $16 IPO a couple of years ago. Came out of the Andy Dufresne. I've been trading this stock. It's phenomenal. So with ONDS and OPEN, I don't even have to care what the market's doing because these stocks just are independent from what's going on. And there's just, like I said, there's so much action in 2025. You just know where to look, pick your spot, make your money, and then you can worry about market direction just for a conversation at Thanksgiving. So
that ONDS is going to 20. The short-term relative strength has been off the charts the past couple of weeks.
Yeah, it really is. It's pretty wild that this thing was 33 cents a couple of weeks ago.
Guys, trade with Kenny. I dropped the QR code on screen. Black Friday offer which is ending this weekend, or I think perhaps on Monday. Get in Kenny's room, special one-time deal, and trade with Kenny every day.
Cheers, my friends. I'll see you, and if I don't see you, happy Thanksgiving.
You too, man.
If I don't see you,
So
Thanksgiving.
So the Black Friday is actually this Friday.
That's right.
You're supposed to buy things.
Black Friday is a misnomer now because Black Friday really means November.
I've been shopping the deals for 2 weeks now.
That's right. Yeah. Wait. We got JC's back, and also Craig Johnson said, "Let me in on this." Craig is chomping at the bit.
You're supposed to shop the deals in November this week. It's for the deals. It's really for the deals. You're supposed to buy things.
Yeah.
In November.
All right. I'm bringing out Craig.
Good.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Craig Johnson.
How are you, JC?
Things are good, brother. Things are good. I'm happy to see you.
That's
I really am.
great.
We don't hang out. We don't hang out as much as we should.
Well, we'll probably see you in Tampa, right?
Nah, I got too many kids, man.
Okay.
It's hard for me. It's hard for me to get away.
We'll let you in, Tampa Club.
What happened in New York? Remember the good old days? We used to do things in New York. Now you're going to Tampa?
100%. But you gotta mix it up a little bit, right, for people.
Yeah, New York's where it's at, Craig. We got to bring it back. Bring New York back.
It is the financial capital of the world, right? So you got to do it. But JC, let's talk about this market, right?
Please.
Listening to what Spencer was talking about and everything else, we got to put this into perspective. And I got to tell me how you feel about a market where you've already got 28% of the 3,500 plus stocks that we're following here at Piper that are already below the April 7th lows. Like, I can't define that as good. Yeah. And then when I go through and I look at other data that we look at, JC, we track.
I like how you're pivoting to those April lows, by the way. That's good work there.
Yeah. And then there's 416 industry groups, JC, that we look at. 28 are making 26-week new highs. And then if I go through and I just look at
Hold on. Say that again. 28 industry groups of how many?
416.
28 industry groups of 416 industry groups are making 26-week highs?
Correct.
So that's 6-month highs, basically.
Basically, correct.
See that?
Sharp as a tack.
Still got it.
You got it, baby. You got it. And then if you go through and you just look at some basic trend work that we've done here at Piper for years, and I'll tell you that I've got 28.8% of those groups in some form of an uptrend, right? Like, how does that make any sense? Like, why are people trying to talk about some sort of year-end rally for this market when we've got participation levels that are absolutely horrible? And the percent of our groups that are above a simple 40-week moving average, 54.6%. And then, JC, take it one step.
54.6% are above which moving average?
A simple 40-week or 200-day moving average.
Uh-huh. And this is in what universe? The 3,500 that you said?
3,500 plus stocks that we're talking about. And then, JC, take it a step further. If we look at the relative performance, okay, I've got 20 of those 416 groups that are, again, making 26-week relative strength new highs. And a lot of those groups are things like, well, gold, silver, marine, dry good carriers. And a lot of the groups, and there's 51 of them, that are making 26-week relative strength new lows. And a lot of those are all your cyclical companies, your tech companies, your cyclical discretionary companies. Like, I don't understand where people are like, hey, we're off to the races here for the next leg up in this tape. Like, I legitimately think this is a market that needs to correct probably towards 6,150, 6,200 before you get the next big sort of buying opportunity.
So 6,200 on the S&Ps. Right now we're at 6,700. So you think another 5% to the downside, maybe 7-8%?
Did that again, JC. Sharp as a tack for the numbers. Right. You need another sort of 5% pullback, retest. This is all normal sort of price action that you typically see. And again, we just really haven't had that sort of pullback and retest of support. So if you guys pull up a weekly chart of the 500, you'll see that 6,150, 6,200 is exactly a retest of where you broke out from. Healthy, normal kind of price action.
Within the context of like a larger secular bull market or uptrend of some kind?
Correct. The secular and cyclical bull market is not over.
Yeah.
Okay. But again, sentiment-wise, I've been having a lot of conversations with people, and everybody sort of views this market as sort of a cookie jar that I'll put their hands in and grab out the cookies, and they think it's just super easy to make money. Like, that's not the case. Remember what Buffett said? You got to be greedy when people are fearful and fearful when people are greedy. Like, you're closer to the greedy side of the world.
You think so? You think so?
Absolutely. When I get a call from my father, okay, and he has a conversation with me that he's talking to an individual that basically thinks they should sell all their dividend-paying stocks and load up on tech stocks, make a quick score, and then rebuy their dividend-paying stocks. It's kind of like you're out of your mind when you're in your 80s. It makes no sense.
Let me ask you something, Craig. We had a conversation recently with a mutual friend of ours, Mike Hurley.
Hurley.
You like Mike Hurley? Is he
Oh,
cool?
I love Mike Hurley. Top gun. Love him.
Dude, he's the man. So his thesis is that this is year one of a new bull market. We got a whole reset this spring, and he's not even talking about sentiment. He's talking strictly market breadth. I would add, a sentiment reset, to his argument as well. But listen, none of us know what the market's going to do, right? So with that being said, I hadn't really thought about that until he brought it up, and I had a difficult time disagreeing with him, particularly when you add that layer of sentiment on top of that. But I'd love to hear your thoughts on his thesis as somebody who, looks at market breadth as much as you do. What are your thoughts on that?
So I'm not in the camp that was a start of a new cyclical, not secular, but cyclical bull. I don't think the secular bull ended at this point in time. I mean, that secular bull started coming off of the 08-09 lows.
So you think that the secular bull market that we're in started in 08-09 and we're still in there? So, yeah.
Right. But the cyclical bull market that started in 22, I still think that is intact. Yeah. I just think that this is a market, when you look at the 500, that you got to the upper end of the price channel and you need to see a correction. One of the things that I would be looking for, and I'd be happy to arm wrestle Mike with this one, right, anytime, is we didn't really see a change of leadership. for me, when I look at cyclical and secular bull markets, one of the things I'm always looking for is a change of leadership.
It's a good point.
Tech hasn't changed.
Yeah.
I mean, tech has been the leadership and still is a leadership. What concerns me about this market and why I think you need to get a healthy, normal sort of pullback and correction in this tape is that you look at the Mag 7, they've been basically going sideways. They've not been leadership coming off of the lows of April. And at this point in time, everybody's been highly concentrated in those names. And we're starting to see other parts of the market perhaps getting a little bit of a bid as people are taking money out of some of the tech names right now, which, again, given the concentration in the Mag 7, NVIDIA, everything else, this market is definitely vulnerable to a setback and a correction along the way. You got to be careful given how narrow this market breadth is. I've seen it 1,000 times before, JC.
Well, you're a lot older than I am, so I can see how many times you've probably seen it.
I can't believe you just called me old on air. I mean, come on.
I just said older. I
know I got a little gray and I'm losing a little things in here, but
listen, nothing but love for Craig Johnson, number one. Number two,
the tax still, you know what I mean?
No, the drip, Craig, you got going on, right, with the Ryder Cup gear, right?
Yeah, I had to go old school with the old one here, you know.
No, I like it. Strazza is freaking out about Craig Johnson's drip this morning.
Yeah.
All right, so I really like what you did comparing the the percentage of stocks against the April lows. I really like how you did that. I like to anchor to different levels all the time and look at the performance and stuff like that. So well done there. Let me ask you this. Me personally, what I've been doing and what continues to be the case and where my attention has been, at least until last week, I guess we'll see moving forward, is we had those October lows, right? And there's some industry groups and some sectors out there, particularly industry groups and stocks, that are making higher lows above those October lows, right? So, my attention is on those names, right? So like personally, I don't invest in the S&P 500. I don't need to be in tech. I don't have like a benchmark that I need to beat to get my bonus at the end of the year. Like I don't have that, right? I could literally just buy the things that I think I could sell at higher prices. Sure. And where my attention is those October lows and the stocks and industry groups specifically that are making higher lows above that versus those that made lower lows, showing that relative weakness. How do you think about that thought process?
Technical analysis 101, right? I mean, our good friend and mutual friend Ralph Akampor had always told us that you got to buy stocks. If you're in an uptrend, you're making a higher high, you're making a higher low. It's that simple. It's that straightforward from that perspective. I agree with you. But if I look at what has been making those new highs, JC, it's like biotech. I'm on board. The XBI looks fantastic.
Dude, if you look at my portfolio, seriously, Craig, I have never owned this many biotechnology stocks in my entire life. Not even close. Not even close. And I've seen I've had plenty of biotech cycles in the past. If you looked at my portfolio the last 2 months, you would think that I'm some kind of scientist or some shit, right? Like, I don't know anything about any of these things.
Well, that's the beautiful part about charts and technicals is you look at the charts and you let price dictate what you're doing. But you just got to be careful because, some of these names in biotech that have got events coming up, they can look like great charts. Like ATYR was a chart that was really shaping up really well, and it went from $6 to $1, right? So you got to be careful.
I think if you, at least what I do, and I think is good, is to filter by $1 billion, right? So I'm only looking at names above $1 billion, so there's a little bit of a quality filter. Like you're not eliminating all the risk, but you're eliminating some of the risk. And rather than buying like an XBI where you have this too much diversification, right. I think a smaller basket of maybe 5 to 10 biotechnology names, kind of helps, mitigate that risk that you talk about that comes inherently with biotechnology. Right. That's how I think about it. You think that's cool?
Yeah, I think that's fair. But I mean, even at $1 billion market cap, you were close to that for ATYR before it fell off the cliff, right? Yeah. But let me hit up a couple things that these that people in the chat want to talk about. They want some names. They want blood. Yeah. They want names.
Give the people what they want, baby.
I mean, okay, so go look at some of these stocks. They got events coming up like Gossamer, GOSS, right? Take a look at that chart. What a great looking chart, $3 stock if you want to play that one. If you want to go look at other things in biotech, don't forget about stocks like LENZ, which has got an eye drop that's already been approved that will allow older people like me, JC, that can put that drop in and for 8 hours can read their cell phone again, which is kind of cool. And then the other thing is that, people are saying Santa's still coming. Well, Santa might be coming, but he's going to take the long road to get to you. Okay, this year.
The Santa Claus rally is a month from yesterday.
I understand. Yeah.
It starts on December the 24th.
Correct. But everybody's like, oh, he's coming. And again, if he's coming, he's taking the long way to get there from my perspective, because I think you got to see a market that's got to pull back. And by the way, if we're going to get an emergency cut from the Fed, there's zero chance that the market's going to take that in any positive or constructive way. Okay.
You think an emergency cut from the Fed, market sells off on that news?
Would be taken very badly. That would get you to my 6150, 6200 in a heartbeat. If that would be,
you think that would spook the markets? Like, what the hell do they know?
Correct.
Yeah.
Correct. It would be spooking to the market from that perspective. And again, people are out there trying to find ways to make money today. And I'll tell you that biotech is on its own little world. It's on its own little space at this point in time. And again, from my perspective, play those names, just size it appropriately, please, right? Because you can't have those single point events with biotech that you don't normally have. And when you have that happen, a lot of these stocks can get really beaten up. So you got to be careful.
No, I agree wholeheartedly. Let me ask you this. For those who don't know, Craig Johnson, the man, the myth, the legend, Piper Sandler, writes Piper Sandler now. Do I have that right?
Piper Sandler, correct.
But
I've been here for 30 years now, JC.
Wow. That's impressive. Probably
longer than you've been alive.
Almost. See, now you're aging yourself. See, I didn't even have to say anything, right? Let me know. You're like an OG TradFi bro, like way more OG than me, right? Like you are through and through TradFi all day. But what people might not know is that there is a crypto side to you. You were orange pilled. How long ago were you orange pilled?
So we've been mining and doing stuff since 2016, 2017. We were having a lot of fun. We still have a couple miners still running, but I've moved them out of my house and moved those up to North Dakota. There are facilities up there that you can get gas for 4 or 5 cents a kilowatt because it's stranded gas up there in the Bakken. So why not just let them run up there?
I mean, you know better than me. And then, so what do you think about the prices of the funny money? You think funny money line go up or no?
So crypto, again, not to get rage here on the chat, but if you look at the longer term setup and chart on Bitcoin right now, it does need to probably pull back towards 75,000 on BTC before you find your support. And again, this is sort of normal behavior for a lot of these names. And I think that's going to be sort of a risk-off message for the market until crypto actually finds its lows and starts to rally off of that. And by the way, at the end of the day, this is probably going to have to pull in the popular averages also. So again, it's all sort of a risk-off.
Any altcoins that stand out? Because I know you're not just like a Bitcoin guy. Like you look down the cap scale. Anything stand out to you?
Yeah, let me throw out to you a couple things that I own, right? So let me grab my phone right here, right? So I've been playing things for trading purposes. I love to trade things. I trade all the time, as you know, JC. Like anytime I can trade anything, I'll be happy to trade it. For me, what have I been playing? I've been playing a lot of Alchemy Pay, ACH, just really beat up. I think that's kind of interesting. I've been playing Solana. I've been playing Chainlink. I've been playing some Ethereum is sort of some of the bigger ones that I have been playing. I've not really been playing Bitcoin. And I am a huge believer in things like Circle International from a crypto perspective. I think Tom Lee's right with the BMNR on the Ethereum. And by the way, if you do any sort of...
Tom Lee's right about what?
Well, the Ethereum play. I think he's totally spot on right. And when you go through and you look at BMNR, and you look at the amount of assets which they've disclosed in their press releases compared to the market cap, like why is this thing trading at such a huge discount to where the assets are priced right now? It seems like there's an easy 20, 30% there. Again, I said 20, 30% just to catch back up to where you've gotten to.
You don't think that all this, all these accounting shenanigans with MicroStrategy and all these other ones that are coming out all the time, you don't think, you're not worried about any of that? You think that's perfectly okay?
I think that
because you're not just a CMT, you're also a CFA.
Correct.
You're that is very impressive, sir.
Thank you. And with that, maybe a nickel, I can get a cup of coffee too, right? But look, I'm not playing MicroStrategy. I have not been playing some of those other names at all. I don't know about some of the accounting issues. I just haven't liked the charts on how they're setting up.
True.
From my perspective, I thought the BMNR is sort of interesting, getting so washed out and trading below what seems like sort of NAV set tangible based upon the assets. So that's where I've been from that perspective. And then again, I think a long-term sort of play for this market is still Coinbase, right? JC, you've heard me talk about this since the day that they've gone public. And the reason I have is there's got to be an easy way. I've done this since 2016, 2017, thinking about not everybody's going to go through the hurdles that I've gone through dealing with crypto and everything else. There's got to be an easy method to do it. And it's Robinhood for the high schoolers, and it's Coinbase for other institutions that want to get into the space. And I think that's going to be some of the winners ultimately from my perspective. And I'm going to buy and hold some of those names. But if I want to be a little more aggressive, BMNR fits into that sort of category, Circle International, because I really do think that stable coins are here. I do think that is the digital dollar. And if we listen to what Besant is talking about, there's probably going to be $4 to $5 trillion in stable coins in the next, call it 4 to 5 years.
And you think that makes the dollar stronger? Like, right, the argument that, crypto's, the end of fiat and everything like that? Or do you agree that all the stable coin does is make the dollar more important?
I think stable coin, not even necessarily related to the dollar. I think it is going to be one of the next biggest buyer of U.S. treasuries, especially short-term.
Bills.
Correct. And we have $38 trillion in debt. So anybody that's not thinking about the $38 trillion in debt and wants to just simply day trade things and flip it around, check yourself. We have got $38 trillion in debt, and we are now borrowing money to pay the interest payments. So trade to your heart's content, but don't forget the big picture out there. And the stable coins like Circle International are going to be buying up a lot of those short-term treasuries. Okay. And we need that, which will probably help keep interest rates down at the end of the day.
That's an interesting perspective.
Correct. Right? Because at the end of the day, China's not coming to buy our debt, and you're not going to get the European Union to come in and buy as much debt. And so some of the biggest buyers of the U.S. treasuries, which everybody should look at, is places like Saudi Arabia has bought quite a bit. And that's why you've been also seeing, well, clearly Russia's not coming to buy our debt. And so you're at a point in time where you need to find another natural buyer. And that's what I think one of the biggest purposes of these stable coins are, to come out and buy and own our debt.
All right, let's come back to TradFi. You're not so sure about a year-end rally. You think market breadth is weak. What would the market have to do where Craig Johnson would be like, okay, I guess here comes the rally to February, December, January pump. What do you need to see?
There's two things that I'd like to ultimately say to get even more excited about this market. The first one is if the market pulls back and corrects to where we broke out from at 6150, 6200, I'm all in. I'm super excited. You're going to wash things out, bring it back to levels that I want to come back and buy, number one. Number two is if I'm wrong, which does happen quite a bit because we're all wrong and we have to sort of right size our positioning. If we start breaking above the 50 days, start breaking back above the 20 period moving average, start pressing up to make new highs, then you got to get back on the other direction.
So this is the S&P 500 breaking above a 50-day moving average. Do I have that right?
Correct. And then you also...
And why 50? What is 50? Like 2.5 months?
50 is basically going to be almost, think about it as more like quarterly, right?
Then why aren't you using 60 or 63 if you want to go quarterly? Why 50?
Well, because you got to remember you got weekends in there too, right? So the old timers, in terms of keeping it simple, always broke it down to the 200-day, which is in essence sort of a 1 year sort of moving average, and the 50-day was sort of a quarterly. Again, just sort of keeping math simple, and just it's easy enough to do it that way. I've back tested everything on the face of the earth, JC, and I'll tell you, we could try to make things complicated if we want, but really simply to understand trend, 50, 200-day is easy enough to go and do without making life too tremendously complicated.
So I'm not a math major, but based on my math, you got the 50-day moving average on the S&P 500. I'm squinting here at 67.13, and we closed yesterday at 67.05. So by my math, we're 8 handles from you saying, okay, we can get a year-end rally.
You also need to get back above the 20-day moving average, JC, which is sitting higher at
about a month. Right?
67.54. And then you ultimately want to say, hey, can we reverse the downtrend that started on 10.29 highs? The lower high was made on 11.12. Break back above that. You got a shot to rally this thing toward maybe 70, 50 by year end. I'm not sure you're going to do that. I mean,
you got to see 69 is what you're looking for.
Correct. I'm not sure you're going to get that. And the reason I say that is, again, you come through and you start looking at the composition of what is powering this market right now is not the stuff that dreams are made of. Okay. This is more defensive. This is more things. So I tell everybody, be a little careful out there in this market. Again, pick your spots, pick your trades, set your levels, put your stops into play, and just sort of be a little bit careful in here.
Craig Johnson, what do you make about practically every country around the world making new all-time highs? When you talk about like the market, right? We're talking about U.S. Has been the entire conversation, maybe except for crypto. But what do you make about all the strength that you're seeing in Latin America, all the strength you're seeing in Asia? Africa has been a monster winner this year. EFA, particularly for like institutional TradFi bros, EFA is one of the most important indexes on the planet. A lot of Europe, a lot of Japan did nothing for 20 years, just started breaking out, new secular bull market, if you want to call it that. How do you put the global markets and all of the resilient strength we've seen all year, all over the world? How do you put it into context with the underperformance that you talked about in the U.S.?
Well, let's break it apart this way, JC. The weaker dollar has definitely helped push up the EFA trade.
The dollar's been ripping the entire second half of the year.
Hang on. Go back and look at a longer-term chart, and you had the dollar coming in. So under Trump 2.0, you had seen a weaker dollar, okay? You've now been starting to see some dollar strength. If you go back and you look at a longer-term chart of this dollar DXY index, you came back right to a multi-year lower end of the channel. And when you got down to that, I got to tell you from a positioning perspective, I was traveling around Europe seeing accounts just a month or so ago. And again, the consensus trade was the dollar was going to break and go lower. And my viewpoint was you're at the lower end of a channel, likely not going to happen. It has been rallying since. I think that trade becomes exceedingly dangerous for U.S. investors, JC, around the world, if you're going to get a strengthening dollar and you got to repatriate those dollars back. Okay.
But that's probably going to hurt international even more, you'd think, right?
Well, if you look at the Italian exchange, if you go through and you look at South Korea, and you go through and you look at Spain, you also look at our friends up north, up in Canada. And all those indexes, JC, are basically parabolic charts. Like, I can't buy that and have a strengthening dollar. You're going to get beheaded.
Something's got to give.
Yeah, something has got to give from that perspective. And as you look at that, it's like I've been telling all the big institutions they should lighten up on that trade, bring some of these dollars back home. And that's sort of exactly what I think needs to happen with some of those international trades. Parabolic charts, JC, they end one way, and that's badly. You just don't exactly know when it's going to end. And you can press your bets as a day trader.
Before you run, gold and silver went pretty parabolic. You think that's going to not end well, or are you impressed with the some of the consolidations and the resilience we've seen lately?
Well, take a look at the chart of gold. You're starting to make a potential lower high. You need to stay above your very simple 50-day moving average there. Silver looks like sort of a double top in here. But if people are calling for a big rally in equities, why would you be buying gold and silver? That's your risk off trade. You'd be
Is
wanting
it though?
for sure it is. The only reason gold and silver has gone up is because we have $38 trillion in debt. Right? That is fact. And also Russia is not buying it. China doesn't want to buy our treasuries. They want to buy gold and silver.
You know, I gotta tell you, Craig, I just don't agree with you there. I love you. You know I love you. Stock market absolutely ripped last year. Gold did very well. Stock market has ripped this year. Gold's doing well again. I mean, I'm just not seeing, gold as a defensive asset.
Correct. But let me just say this, JC, that is not normal when you go back and you look at history to have gold and equity markets moving in the same direction. And by the way, do you remember?
I know, but which market is the market that's actually going to pay us? All those other ones or this one?
Hang on. Give me 1 second. Do you remember 2006? What were you doing in 2005 and 2006?
Studying for my CMT exams.
Smart guy. And I probably graded your test and it was all good, right? But let me just say this. There's two things that I observe in that period. Okay, number one, it was about a month ago, we had a scenario where we had 80% of the stocks in the market down, and we had the index S&P up on the day. The only other time that has really happened in sort of the modern history that we can lean back to is 2005 and 2006. That was also the same period of time where we had gold and silver making 26-year new highs. That was closer to the end of a bull market, okay, right ahead of where you were in 2007. Again, I'm not saying the world's coming to an end here, JC, but again, sort of put this into the context of history. Gold, silver moving up with equities is not sort of your normal trade. And again, a lot of it is international buying and more state buying than anything else for the gold and silver because we're $38 trillion in debt. Our kids are going to have to deal with that, and that's going to be painful.
Guys, I want you guys to understand, Craig Johnson is a very open-minded man, and I respect that. And, there have been times where he's bearish and everybody's bullish, and there have certainly been times where he is like the most bullish guy on the planet when everybody's bearish, and I've had a front row seat to it. So, when Craig Johnson is talking, he's definitely somebody we want to listen to. You mentioned your travels in Europe before we let you run. Your favorite city to visit in Europe. It has nothing to do with business. Forget the business. just the fun part.
For me, I always have been very fond of Switzerland, right?
Yeah.
And Zurich, I really like. Geneva, I really like. I also really like Lugano on the Italian side down there too. But I got to tell you, I got some good friends that live down in the Bulgari area, down in Italy. I'm kind of fond of that. I'm making a couple trips there recently too. There's a lot of great places to go to.
Definitely. You could drink your way through all of Europe.
I don't drink. So I leave that to Mrs. Johnson to take care of the wine for me,
I'll handle that for you. That. Ladies and gentlemen, Mr. Craig Johnson, you are the man. We got to have you on more often. This is great.
Hey, you got my phone number. You just got to reach out, my friend.
I know. You're right. When you're right, sir. I guess we'll see what happens.
All right. Have a wonderful Thanksgiving, everyone. And again, happy to chat with you, JC, anytime.
Yeah, for sure. I'll take you up.
You look amazing as always. I don't know how you clean up so well.
Well, you tell my wife that.
Right.
Thank you, Craig.
Right. She does a good job with you, okay?
Yeah.
All right.
We'll leave it at that.
We'll leave it at that.
Dude, he's the man.
I just want to say Craig Johnson is 100% on the Mount Rushmore of regular guests that we have on the morning show. So if you missed this interview, go ahead and back it up and listen to it. I agree with like 100% of what Craig just said. This is truly one of the smartest guys that we are lucky enough to surround ourselves with. That interview was great.
Did you hear that? Do you hear that, JC? He's smart because he agrees with Steve.
No, that's not what I mean. Because he's the man. Like, yeah. You know how many times I've been on the phone with Craig at major inflection points in the market over the past 2 decades, decade and a half, let's just call it. Decade and a half probably, on the phone, arguing, debating, agreeing, disagreeing, it's great. you know, and I look forward to more conversations with him at other key inflection points in the future. He's one of those, like Strazza said, he's on our Mount Rushmore of this show, no question.
I mean, he does the work.
That reminded me.
Leaves no stone unturned.
Yeah,
Craig Johnson.
I like how he does the
that
3,500
conversation.
stocks thing.
Yeah.
Yeah,
But
that conversation was kind of like watching two heavyweights go back and forth. You know, it was good.
It's
I really enjoyed it.
You know,
I really enjoyed it.
by the
Yeah.
way, you know, Craig, as far as his data goes, Craig is like
Data.
crazy
That's
OCD about his data. Like he's
Big
got
data guy.
conspiracy theories about how one day they're going to take away the data and then he's going to be the only one with all the real data.
Yeah.
Like
He's
he is
gonna-
hardcore, dude. I'm
He's
telling
going to
you.
be Bloomberg.
What?
Craig's going to be Bloomberg one day. You're going to have to
No,
go to
but
him.
he has talk about risk management. He has these theories that one day they're just going to pull all the data and no one's going to have it. And then he's got it all. Like he has it all in his computer. The files are in the computer.
And another thing, slightly different, less popular perspective on the precious metals trade. But I think he's spot on. What's going on right now with China, the central bank of China, not buying our treasuries? I shit you not. This has everything to do with the trade war. This is simply a negotiation tactic, right? We want our bonds to go up and our rates to go down. China is second largest buyer in the world of our treasuries. They know that we want that, and they're not giving it to us. So all that money is just pouring into gold. And
I like his stable coin theory. I thought that was interesting.
Whenever money flows into an area for reasons that are naturally temporary, like gold, big flows into gold from People's Bank of China, they're coming out. That money's coming out one day and it's going back into treasuries when they sort this thing out. So I think the price action in precious metals right now, like he's saying, it's almost artificially strong.
I mean, listen, you know how much I love Craig Johnson. He's the fucking man. I disagree with a bunch of things he's saying. You know, as far, you know, gold being defensive. I just don't see it that way. Yeah.
You hear the situation. You understand that.
Yeah, I don't see it that way. I also don't necessarily agree that the relative underperformance from a large majority of stocks means that there's weak breadth. I think there's just more concentrated leadership. That's not necessarily as negative as he makes it out to be, in my opinion. I guess we'll see.
The breadth is about the total of stocks on an individual basis and what they're doing. So that's literally the definition.
Yeah, and the majority, and on an equally weighted basis, the S&P 500 is up 9% this year. The Nasdaq equally weighted is up 11. The Dow equally weighted is up 13. Like that just doesn't seem like most stocks are falling.
I'm gonna say one more thing about this, and I'm pretty much done. I love you. You're right all the time, but you've been a correction denier for about.
I was the first one who talked about it.
Correction denier.
It started September the 11th. I've been talking about it ever since. I was the first one to bring it up. I even walked through how it was going to look, and it looks just like that.
You can't lie. The people watch the show every day.
Check the tape. Check the tape.
No. Yeah.
September 11th. September 11th.
You better say nothing, Spencer. All right.
September 11th.
Phil, we got Phil.
Dr. Phil is somebody who I don't like to disagree with Phil, because Phil's one of those guys where when I listen to him, I'm glad I listened to him. When I don't listen to him, I wish I listened to him. You know, Phil's one of those guys. So when I disagree with him, I really need to think about it. Am I sure that I want to disagree with him? Bring him out. Pearl Dog.
Fellows. Hey, you know what's not on the program? Program?
What?
Fibonaccios.
Yeah, no nachos. I like what you did there, Fibonaccios. I like what you did there.
I got my shirt today in celebration with the Fibonacci holiday that we just had. It's great stuff.
I love Phil that you're coming in hot with the Fibonacci. I've been reading this book about, you know, sacred geometry, and you know, it's got me feeling certain things that I'm not so comfortable with. It's taking me to new places. Is that okay?
Sure.
Yeah.
Sure. I mean, life is totally crazy. There's so many crazy things that we don't know.
Wild.
And it's just, you just let yourself go. You just like let yourself have it. You know what I mean? Like something hits you like a ton of bricks. and you just like you let yourself vibe on it. It's great. Okay,
Yeah.
so we're gonna get right into this because I do have something to say today. So Thanksgiving kicks off the seasonality of weight gain. This is the time, right? It's Tuesday right now. Thursday, you're gonna start gaining weight. People gain more weight from Thanksgiving through New Year's than they gain the whole year. So in other words, they're net losers of weight the whole year, except for this season where they gain more weight than they lose the rest of the year. And adults in the US, if you haven't noticed, we have an obesity epidemic, and adults in the US have a tendency to gain about 1 pound to 2 pounds a year. So you think about that. You get to 50 years old, and there's a lot of people running around who are 30, 40, 50 pounds overweight. And it is because of this, partly. So here's the thing. What do you do? Okay. I'm going to start over the next couple of months. I'm going to have over the next month or so, I'm going to have a whole lot for you about this. And I'll be talking about it next week too. More about how to get yourself healthy as fuck in 2026. Because New Year's is a good time, just like Dow 40,000 or Dow 10,000 or whatever, Google 4 trillion, whatever you're talking about, round numbers do matter. Could you throw that chart up, Spencer? Could you throw that slide up, bro? But anyway, so what I have for you guys, there's a seasonality weight gain. It's from New England Journal of Medicine. And if you notice in the U.S., is that orange line. Look what happens during Thanksgiving. It ticks up like crazy, right? And then we rally into the end of the year, into January 1st. And then the rest of the year, we're net losers. Same thing in Germany. Man, they go crazy in Germany. They're going, you ever really want to party, you probably go to Germany between Thanksgiving and New Year's, and you just party your face off, right?
I'm pretty sure you want to go at the end of September. I believe
there you
they
go.
call it Oktoberfest.
There you go.
I think that's where you want to go.
Schlachen, fla, fla.
I never made it. I never made it to Oktoberfest, unfortunately. Over the years, I have been to Munich. What a beautiful town that is. What a nice town, dude.
I've only been in Munich, running through the airport to make the connection to Italy. That's
Sure.
the only time. But anyway, I have some tips for everybody for like, what do you do? Like, so here's what you do. Okay. You wake up Thursday morning and you get outside. Okay. If you got a turkey trot in your neighborhood, you go do the turkey trot. You don't have to go fast. And by the way, if you go for a jog every other day for the rest of your life, you're going to be healthy. Doesn't matter if you go slow. Doesn't matter if you don't go far. If you go for a jog every other day for the rest of your life, you're going to be healthy as fuck. It's ridiculous. It's like a law. It's like the simplest law of getting healthy. But anyway, you get up and you get outside. You go for a hike. You go for a long walk. All your family's there. So if you got kids, you rustle up the kids. If you got an aunt or your parents are in town or whatever, you rustle up the family and you get out there and you go you bundle up. You get some scarves. You go for a long walk. Or you go do the jog, go do the turkey chop. That's number one. Number two, the right foot rule, right? So the right foot rule is that you get off on the right foot. So you make sure that the first thing you eat during the day, no matter what time that is, the later the better, the first thing you eat is animal protein straight up. So, you grab a turkey leg and you just start gnawing on that bad boy. You grab a half a dozen hard-boiled eggs and you just fricking knock them down. That's the right foot rule. The first thing you eat that day.
Dip them in hot sauce. Dip them in a little Frank's.
Dip them in a little hot sauce. You know what I do? I coat them in a little Old Bay. I do.
Because you're from Maryland.
I do soft-boiled eggs and Old Bay like fricking multiple times a week. You lay low on gravies and sauces. Gravies and sauces are hidden killers, filled with starches, a lot of times filled with sugars as well. This is a little trick. You start as late as possible and end as early as possible. So don't start eating at 11 o'clock. If you start eating at 11 o'clock in the morning, by 2 o'clock in the afternoon, you're going to have 8,000 calories, and then you're going to go eat dinner. So if you start with dinner, it's a little intermittent fasting. If you start with the dinner, you don't start eating until about 3, 4 o'clock in the afternoon, at least you waited a little while. Go to bed early. That's always a good advice 365 days a year. And then JOMO over FOMO, right? So you take joy, you take appreciation in missing out. You don't have to have a third piece of pecan pie. You know what I mean? You could just let that one go by. You just let it go by. You just take some joy and, hey, you know what? You have that last piece. You have the last piece. And then last one, and I'm really sorry to say this, drink less, right?
Why are you sorry to say that?
Well, people hate that. People hate that one more than any other one. I'm always
Not these days. There's less and less drinking these days.
There's less drinking these days, which is fantastic. There's more. Unfortunately, there's more marijuana smoking. If you're young, especially, and you're watching this, stay off the pot, dude, because it's really
You sound like Stephen A. Smith.
Oh, does he say
Stay
that?
off the weed, man.
Stay off the weed, man. Yeah, you want to stay off the pot, especially if you're young. You want to stay off it anyway, especially if you happen to be depressogenic. This time of year, people get a seasonal affective disorder. They have a tendency to get a little depressed. If you have a tendency for mental illness, if you have it in your family, stay the fuck off pot. But drinking is just, dead calories. In fact, I had a client once who was a quant. Last thing I'm going to say really quick. I had a client once who was a very successful quant hedge fund founder and general partner. And we went for a walk in the park one day, and we were talking about his drinking. And the next day he sends me a spreadsheet with all of the calories, how much he drinks in, per week, per month, and how many calories he's wasting on drinking. Dude never had a drink again after he sent me that spreadsheet. Because he was like, holy shit, that's why I'm fat. The guy was exercising like crazy. He's like a really healthy guy, a distance runner, but he couldn't lose the paunch, even though he ran distance. And it was just because he was drinking, 18, 20 drinks a week.
Phil, you said you were hating on sauces earlier. One of the sauces I really like, and I agree, like barbecue sauce and ketchup and all that shit. But when you're making your own sauce, if you just start on a pan with shallots, olive oil, and garlic, and just start there, maybe throw some cherry tomatoes in there, let them, blister in there, a little heavy cream in there, and then throw some grilled chicken in that sauce. Nothing with some spinach. Nothing wrong with that, right?
That is a perfect meal right there. Right. That's beautiful.
And the cream, the heavy cream's okay.
Heavy cream is absolutely okay.
It's a little bit.
Just want to stay away. One weakness that I have is cranberry sauce, because they pile the sugar. If you take a look at a can of cranberry sauce,
yeah,
or even just get it made, or even make it yourself, and you look at the recipe, filled with sugar, because it's a very tart fruit. So you got to put sugar in it, and it's super sweet. And honestly, I'll probably have a little bit of it. I'm just honest, but I'm a lean, mean fighting machine. I don't even care. I have a little bit of cranberry sauce. That'll be my one ill. That'll be my one sin. But anyway, that's what you do. I'm going to post. I have a post about it. I'll post it on Twitter a little bit later, and I'll be back next week. I'm going to be writing more and more about how to get healthy as fuck for 2026. Stupid, simple way. You don't have to know about VO2 max or mitochondria or telomeres. Just do this, do that, do that. You'll get healthy as fuck.
I think that's a good place to leave it. Thank you, Phil.
All right, guys. My pleasure.
Dog.
Good stuff. All right, we're getting out of here. Can't talk. Strazza going live right now, the open bar. If you're watching on YouTube, it'll redirect you to that stream. Thanks for watching. Thank you, Phil, Craig, Kenny. We'll see you tomorrow. All right.
Guys, slamming puts, he says. Slamming puts.
I don't know.
I can't take no loss.